Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the charts behind me, which as you can see is the UVIX, and this is, of course, pre-market prep for Thursday, April 10th. And so I'm going to be diving through the normal tickers, beginning with the UVIX here. But I did want to point out that I do have a poll live on X right now for the ticker I will be going over towards the end of this stream. It looks like Rocket Lab is in the lead. And the other one that I added from yesterday is also Lithium America. So that's actually one that I'm pretty interested in. I've been getting a lot of alerts on it. And yeah, if we're just going to be maybe doing some more, mining and whatnot, especially of lithium and electric vehicle stuff, that could be a very nice play. So interested in that, and kind of surprised Chewy and Palantir have kind of been lagging, but I suspect I will be going over I will be going over Rocket Lab. 6 minutes left in that poll, so if you do want to vote in it, make sure you do soon. But anyways, coming back to the charts here, looking at the UVIX, this is the 2X Long VIX Futures ETF. Always go over this one. I'm pretty excited about it because I think I might have been spot on with the kind of green window there, so I'll be going over that. But the UVIX did close yesterday on April 9th at a price of $51.92, being down nearly 44% on the day. But it does look like it is bouncing some in the pre-market, up a little over 15%. And so we'll look over at the 10-minute time frame in just a minute. But I did want to go over, basically how, I have been mapping out that each of these windows is about 14 days or 10 trading days, 2 weeks. And then if I do move that over here, it's the same for the green box. And so I had kind of preemptively started to think that the top was in for the UVIX last week. I was wrong. We got another massive move, a breakout from this parallel channel, similar to what we saw over here, but it did not go up as high. And so it is quite possible that this does continue to go up, but I suspect that the near-term top is in and that we will be seeing another approximately 2-week downward period. And we can see over here that the boxes do kind of range in size, especially I imagine Good Friday next week. I have off work, and so that would make it a shorter time frame here. But let's just put up a red box to kind of suggest where price could be coming back to. And in all honesty, I think it's probably just going to be coming back to this purple line. I don't think it's going to be coming all the way down to 30, but let's just draw that out. And so let's make sure that this is going to be 2 weeks. So I believe that would be the 17th, no, the 18th. But I think the 18th is actually a holiday. But yeah, let's just draw this down to here. Maybe let's draw this corresponding with the gap fill from over here. So actually that would not be the gap fill. I was thinking from the top here, but the gap fill would actually be the close from April 2nd. And so that is at a price of $35.32. So I'll want to adjust this over here to $35.32. Got that high up there, so that looks good. And then I just want to adjust that to be faint. Bright. Oops, no, I don't want it to be green. Not another green week. I want that to be red. And I think I actually want it to be that lighter red there. So yeah, I mean, that is what we could be seeing. We did see this massive bearish engulfing candle. Didn't engulf the high from Tuesday, but it did engulf the open and the close, also the low to the close from Tuesday. And that is, of course, on the updated tariff news that there will be a 90-day pause for the countries that did want to step up to the negotiations table. But those that retaliated, like China, will be seeing the tariffs, which I believe right now for China are 125%. And yeah, so I think it's good to be bringing those countries to the negotiations table, by negotiations by putting out on the table high tariffs, or by forcing them through because they were retaliatory. Anyway, sorry, I'm a little tired. But so let's see. Bearish engulfing candle. We actually did see. So this is, I was looking at this during the day, noticing that the volume was downtrending. But that was during the day before the market had closed. And with the market close, we can see that volume actually increased. So that does make me think that the top is in here. And so I'm probably going to adjust an alert here. And so that was 35.59. But maybe it doesn't come down to that level. So let's say I'm going to do an alert here. I'm going to adjust this alert. And it's above 40. I probably want to make that below 40. And to not be so greedy, getting it to that specific purple trend line, to that specific gap fill, and also having fun with numbers, I'm going to make it be $36.90, so 36.9. And yeah, we'll see. Or, I could do 40.20. Yeah, that's actually, and I'll adjust this other one actually to be 30. So that orange line. But yeah, I am expecting this to pull back. And with that being said, I think that, the SVIX could be a good performer in the next coming weeks. So we'll look at that in a minute. But I did first want to look at this on the 10-minute time frame. So we can see that, this was holding up above 90 for the first, half of the trading day, until we got the news about the 90-day pause and whatnot. And then this just dropped. This plummeted, coming down to a low of $44.42, below that red line at 54.60. And then we did trade into the after hours, still below that line. But then very interesting, we gapped above it, 54.60. And we are trading above it now. It looks like we are at 60.24 here. And so, yeah, we'll have to see where this takes us into the trading for the day. I suspect we'll probably get a little bit of a bounce, but I do think that we will continue down, like I said, to around, 35 to 36 or $7 a share. So I'm excited about this. I'm excited about this pullback. And just before I do switch over to the SVIX, let's look over at the VIX here. This does look like a pretty big red pullback. The VIX, which is, of course, the market volatility index, closed yesterday at a price of $33.62, being down nearly 36% on the day. So now I'm wondering, is this going to pull back to that red line that is around 28.32, which corresponds with the high from December 18th. And also, if we do look at the UVIX, we can see that is the red line here, which we did close below yesterday. So there's kind of a little bit of divergence there. The UVIX is seeing a bigger pullback than what we saw in the VIX. So maybe the UVIX is just foreshadowing for the VIX to actually come down below this red line and find some support there. But that isn't really, too surprising, because the UVIX is 2x long, whereas the VIX is, just the volatility index. So we'll have to see. I do think that this could be pulling back to 28.32, also corresponding with a confluence of levels, given that we have this light blue uptrend right around there. I don't necessarily think it will be coming down to the orange line at 23.76. That would be, I think, being a little bit greedy. But with, these levels being talked about here, I should probably adjust them over here. I'm going to leave the 20 because I think that's an important one. I might adjust this below, let's see, 15 to be below 23.76, or maybe I just want to make that 24. And then the above 65, I'll probably leave that, but then I might include another below one where I have the 28.32 there. I might just be, rounding to 28 there to see if we do get, a return to that level. And, I suspect it'll probably wick below it, but I don't necessarily think it will wick below 23.76 if we do get around that level. So yeah, pretty excited about that. And with that being said, let's flip over to the SVIX, which, I should have been more disciplined about this and just waited for, let's see, the end of the trading yesterday, sorry, 2 days ago, Tuesday the 8th, and we saw a low of 10. I should have waited for that box to be hit, just like over here. That was the high with the UVIX. The SVIX is the short VIX futures ETF, not leveraged, just negative 1x there. This did close yesterday at a price of $12.99, being up over 19% on the day, but it is pulling back a little bit in the pre-market, coming down about 6.6% there. And so yeah, 10 would have been a really nice dip buy, and that would have led to a almost 30% rally, over 30% to the highs from yesterday. So that would have been really good. I got in over here, and my average is somewhere between 14 and 15.13. And that's actually something that I did want to talk about. This bounce level, the 382 at 15.13, corresponds with this retracement where we can see the high from March 25th was at a price of $23.42, and then that low of $10 hit on Tuesday, April 8th. And so the 382 would get us to 15.13. And that's really just based on, this bounce that we saw from the high that we hit on July 12th at 51.59, came down to a low on August 5th of 17.50, and then retraced to that 382. And so, I was thinking that maybe we see something as dramatic as this, and then we get a bounce to the 382. And so that would be kind of my level to get out at. But if we do look over here, what kind of drop did we have? We had a 66% drop over here, so pretty massive. What kind of drop did we have over here? Similar percentage or not? Let's see. This was a 57%, 57.5%, so similar, but not quite the exact same. And so I was thinking maybe we would want to compare this to the bounce that we saw here. Maybe that is going to be a little bit more similar. And so let's see, this downside move was about 35%. So, we are somewhere in between, the massive drop that we saw here and the smaller drop that we saw here. We are definitely closer to this one, more similar to it, but I thought it would be good to just, sorry, bump the mic there, get a retracement here to see what the 382 or what the level we saw here. It looks more like a 50% retracement, and so that might be something. So in the small trade that I have, could maybe take a little bit more profit. Yeah, so coincidentally did not have this planned out, got the 382 and the 50% mark there, and I'm just going to zoom in here so I do see those highs and lows on the charts, so I can just map them out. So we do have 1781 here, that does look correct, and then 2723 also looks correct, and do have those correct proportions there. So going to have that up there, lock that into place, and I might color this one yellow, or no, I'll do it red still. And so we can see, actually, maybe I do want to do the 618 as well to maybe see if that was hit. And so 618 was not hit. So I think that's getting to kind of greedy territory. So I'm not going to leave that up there. And so with that being said, personally right now, I do just have a limit sell placed at 15.13. But let's look at the 50%. Maybe that is something that we might be able to pull back to. And I do have it as red because that is, levels to exit at. And so that's 1671. So yeah, I could probably just adjust this limit sell to 16. I think that's reasonable. And then I think that would get me to around a 10% swing. I'm not exactly sure. But yeah, so let's see. Let's draw out, just like we did with the UVIX, the red box over here. Let's draw a green box for the SVIX, that might be suggesting where price could be going. So going from that low of 10 and then going forward to April 18th, we can see that this, let's see, get that lined up approximately with 1671. That is where I think price could be going to. And let's see. Oh, that's not, I don't want the retracement. I want this. And so let's just see that rectangle. Oh, I was looking at 618 midline. Oh, I didn't know about that midline. That is very interesting. I was not aware of extensions. Very neat. I might have to explore that at a later time. But yeah, very interesting. This number does haunt me. 69. I wanted that to be 71, so I am going to change it and adjust that there. And then I will, let's see, adjust that to be faint so it's not so bold, and then make that green. And so that is what we are looking at. And then I will adjust or add, I should say, an alert at 16. Crazy how that was lined up perfectly there. And so that is kind of what I'm looking at. And yeah, we'll see if we do get that nice bounce in the coming 2 weeks. And also, you know, kind of because I was talking about this with the UVIX, a little bit of a spike in volume there. With the SVIX, we actually didn't see that so much. We have continued to see a decrease in volume. The volume on Monday was 70.66 million, then Tuesday 49.29 million, and then yesterday on Wednesday 45.47 million. So that is showing some weakness, that this bounce may not be as strong as the pullback that we see in the UVIX. So, you know, maybe I do want to, maybe what I want to do is trim a little bit at 15, 13 and then sell the rest at 16. I'm not really sure, but I don't think I should be so greedy getting ahead of myself. I'm not really sure. I need to think about that. But for now, 16. And before I do switch over to the SPY, I should look over at the 10-minute time frame. Just like the opposite of the UVIX, we did see you know, kind of hanging out in the lows with the SVIX here before that tariff announcement. Then we saw this massive move to the upside, going from, let's see, during market hours, range of 10.34 at the low to the high of 13.34, so a $3 swing there, holding those gains into the after hours yesterday before a gap down, hitting a low during pre-market of 10.52, but then bouncing a little bit from there. So we will have to see where we open up at. But yeah, that's enough about you know, the shorting of the VIX. Let's flip over to the SPY, where we got this massive green candle here. The SPY, which is of course the S&P 500 tracking ETF, closed at a price of $548.62, being up exactly 10.5% on the day, or $52.14. Very massive, very impressive green candle there. And so this is, I believe, the second biggest rally. I should maybe say that for the SPX, so I'll save it for that. But yeah, we are pulling back a little bit in the pre-markets, pulling back by about 2.25% or so. We did fill this gap here, so I'm going to make that a solid line. And we did get a very nice bounce. It looks like a few days ago on Monday, we did test this green line at $487.65, which corresponds with these lows from April 14th. Also with the beginning of this orange trend line there. So, you know, I did talk about that level. Congrats if you dip bought. Congrats if you bought when Trump was saying it's a good time to buy. So pretty cool there. This was a bullish engulfing candle here, and that did engulf the open and close from Tuesday, but did not engulf the low from Tuesday. But if we are looking at the volume here, we can see that the volume on the green days has been higher than the volume on the red days. That does suggest we will be seeing a reversal but we are looking like we are bumping into, that orange trend line I was just talking about, which is based on, of course, that low from April 19th, as well as the low from August 5th, which I view as very important dates. So makes sense that we are bumping into that level as some resistance. So maybe what we see today is, a pullback to around 536, find some support at that gap filled level. Before continuing higher, maybe getting up to like 560 or so, corresponding with these kind of like double top area here. Maybe that acts as resistance again. So pretty interesting to see that. But let's just zoom in on the chart real quick here, looking at the 10-minute time frame. And so we can see the trading into the open yesterday kind of flat as expected, just like the SVIX, before we got that news on the tariffs move up to fill that gap, consolidate right around there before going higher into the pre-markets, hitting a high yesterday of $548.62. And it looks like that's where we closed at. Before getting into the after-hour session, consolidating around that level before gapping down below that gap filled, and then finding that as resistance in the pre-market. So pretty interesting to see that. And so it does seem like we are below that gap fill level. And what I might do, I'll leave this extension here, but I'm just going to remove that 100% so it's not cluttered for us. And what I might do is do a Fibonacci retracement here to see that maybe we get a 382. I just want to get that lined up to the high there. So that was, let's see, 0.1. That's lined up at $481.80. And then that 0.2 is at $548.62, so get it to the high there. And I'm going to leave those proportions. I'm just going to leave those there. I will make this, let's see, green to suggest that that might be corresponding with some dip buying levels. And so, yeah, since we are below the gap now, what I could see happening is maybe a retracement to maybe 523 or 515, and then from there maybe we start to go higher. So we'll have to see. Did not pick up the nice intricate doodles that I had there, but maybe we see a pullback to around 523, 515 before starting to get back up to that double top region, and then maybe find that orange uptrend as support. But I think we might be getting rejected in the shorter term, so do keep an eye out for that. And maybe I will adjust this alert to be below 520 now, being right in between those two retracements. But let's flip over to the SVIX. I am going to, just like I did with, or sorry, not the SVIX, the SPX. I am just going to adjust this real quick before I start talking about the closing price. So it matches let's see, gap fill there. So I'm getting ahead of myself. So it matches the SPY. And so the SPX is, of course, the S&P 500 index, went up 9.52% on the day, closing at a price of $5,456.90. Again, that's 69 haunting me. Yeah, this is, I believe, the second biggest rally that we have ever seen in the S&P 500 index. The biggest one, I believe, was from 1933, and I believe I got that information from Crypto Rover, so I don't know where he got that information, but I imagine it's true. And so we did get, bullish engulfing candle engulfing the open and close from Tuesday, looking really good. Did get a very nice bounce from that green line that I had drawn here based on that low from April 19th, as well as the other pivot point for that orange uptrend being from August 5th. And we can see that we did bounce up to approximately that level, and we might be seeing that as some resistance if we do pull back based on the low of $4,835.04 being the low from Monday. going up to the high from yesterday, which I'm going to have to adjust here. The high was, let's see, 5,481.34. We can see those proportions there, the 382 and the 50%. I'm just going to make that retracement green and lock it into place. And so that could be suggesting that we see a pullback to around $5,234.45 or $5,158.19, being the 382 and 50% retracements respectively. And I might just add an alert here. And I'm going to put that alert just kind of, rounding here to $5,200, make that below. And then let's just see these other levels that I have. I guess I'll just leave them up there. And so that would be kind of suggesting where we could be coming back to. That would not be a gap fill here, but maybe a gap fill. Actually, no, that would be to here. So, we'll have to see. I think that these gaps will probably get left behind. $5,200. Let's see if we get that. But now let's look over what's the next one that I wanted to look at. Bitcoin. Let's check out Bitcoin. And I did post on the channel that we got a CME gap, but I was actually incorrect about that. Bitcoin did not fill the CME gap here, which is around 84,000 being approximate, but I had a limit sell at 83,000 for my CME gap weekly swing trading position, only $50, which I turned into 53. Not that exciting, but it's something. It's a little fun to have on the side. And so the high yesterday hit on April 9th was around 83,600. And so we did get rejected, it looks like, from that red downtrend that I have drawn here based on these two pivot points. Maybe it's a little bit wonky. Maybe, I could adjust it a little bit, but that was, a nice level to be considering for a rejection, as we are now trading Bitcoin around 81,700, 800, somewhere around there. And we'll have to see if we do properly fill this gap, or if we do get rejected, maybe pulling back to this light blue downtrend, which is, maybe that would be a retest of around 78,000. Maybe we see that before we do break out. No idea. I'm feeling really good about Bitcoin. I'm feeling really good about crypto. And one that I'm pretty excited about to be talking about is, of course, going to be Ethereum, which is currently trading around $1,600. Did hit a low on Monday, it looks like, or no, that was Tuesday, of around, just below $1,400. I do have this green line here at $1,424.30 or $1,424.30, and this alert, at 1,400. That went off. That was a really nice dip buying level. From that level, or just this green line here, price did go up about 19%. 14% there, currently around 13. And so, that's just, a nice level. Excited about that. We do have a confluence, two green levels here, which I think I drew up yesterday. I was going to say last week. Yesterday, that was the pivot high from January, the week ending in January of 2018, January 12th. And then the green uptrend here based on the pivot high from June of 2019 and the pivot low from June of 2020. And confluence of levels. And we're testing that. So I am really excited about Ethereum. I think there could be some nice upside, but maybe we get rejected here from this yellow uptrend. It does seem like that is what is potentially going to be happening. That did act as support over here, so maybe that acts as resistance. It is yellow, flipping support now to resistance. But I think that we are in dip buying territory. I am liking it a lot. And I am going to now switch over to ticker symbol URA, which is of course, the Global X Uranium ETF. Closed yesterday at 22.12, being up 9% on the day. looks like it got rejected from this 1618 extension that I had drawn over here at around 2214. Didn't get down to 19 or 1886, which I have drawn here is the 100% extension from this, and that is at 1886. Or right around 19. Didn't get down to there, hit a low of 1950 on Monday the 7th, and now maybe getting rejected from around 22. But now I am just going to switch over to check out that poll. Looks like Rocket Lab did win. So I will be pulling up Rocket Lab, record a quick little video on Rocket Lab to release later as a clip. And then I'll open up the live chat just to see if there were any comments there. Sorry I had that closed. Just I get to rambling here and don't want to lose my train of thought. And so let's just look at this. Very nice gap fill. I'm liking it. And yeah, I'm just going to, let's see, I will... yeah, I'll just leave it. Yeah, I'll leave it like this, and I'll just kind of record a video on Rocket Lab. And so, yeah, I'll just start that now, and then I will like kind of end the video at the end of this Rocket Lab video, but then I'll open up the chat so we can say hi and whatnot. But yeah, so. Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Rocket Lab, ticker symbol RKLB, which closed yesterday on April 9th at a price of $28.59, being up nearly 20% on the day. But it looks like it's pulling back a little bit in the pre-market by a little less than 4%, trading around or sub $20 a share. So we'll look over at that 10-minute time frame in just a minute. Actually, let's do that right now. So 10-minute time frame in the trading of yesterday on the 9th, waiting for that Terra news before Rocket Lab launched up, hitting a high yesterday on the 9th of $21.39, holding the majority of those gains into the after hours before gapping down a little bit into the pre-market. We'll have to see where it opens up at, but I think that the chart is looking really good. And with that being said, I wanted to go over some levels that I have drawn up here, and the one that really stands out to me that I'm pretty excited about, I suspect that you guys are too, is that there was this gap formed here on earnings day on November 12th, closed on the day at a price of $14.66, leaving this gap here as it did gap up after that after hours earnings call. But if we do look over at the price over here, $14.66, what was the low from a couple days ago? The low was actually $14.71, so didn't fill that gap. But I think that there's a lot of very interesting psychology around gaps and gap fills. Maybe this is just me pulling it out of my behind, but you know, if I am a retail trader, let's say, and I see this gap, I didn't get on board at earnings, and I see all of this price action up here, I say, man, I wish that I would have gotten on board, but I'm going to be disciplined. I am going to wait for that gap to be filled at $14.66. We dip down on, let's see, Monday the 7th to that low of $14.71. I'm going to be disciplined. I'm going to wait for that gap to be filled. It doesn't get filled, 5 cents away from it, and then the stock price takes off, going up from that low 40%, over 40%. And yeah, so I find that to be pretty intriguing, especially with this now over $20 a share. But in the pre-market, we are seeing it, below 20. So maybe we see a little bit of a retracement. I'll draw that in just a second, where I think there could be some dip buying opportunities before the next leg up. But I first wanted to kind of take a look at the levels that I have drawn up here. This actually, I had picked up some shares up here, not a very large position, but then it started to come lower. I'll have to look where I sold them at, I believe around here. And yeah, I could have been picking up much cheaper. I did not buy back in. Even at these prices at around 20, I could be picking up at a discount. But yeah, so let's see. I did have this Fibonacci retracement here. We did start to break below those levels, breaking below that full retracement. And this was based on the low from January 14th, which is at a price of $23.42. And then I also drew the 1618 at 17.29. So that would have been a very nice dip buy level. And so what I might do is just remove some of these levels here, since they did not act as anything too notable, because we did pull back to that 1618, and I'm just going to make that green because that suggests that was a really nice level to be dip buying at. So 1729, 1618. And maybe just out of curiosity, I will, let's see, add the 2618. That's not even on the chart, so I'm not going to have that up there. And then a couple other things that I have up here, which were a little bit disappointing, is this consolidation here. I was expecting or hoping this would kind of retest the parallel channel, the bottom of that parallel channel, bounce and then go up higher to around 35.56. We unfortunately did not see that, so I am going to delete that. And, I'll leave that parallel channel there. It did see a breakdown there, so that's fine. And I think that this parallel channel here might be a level to be cautious of. So I'm going to make that red. Maybe that's a level to find as resistance. And so maybe, let's see, wherever we come up to that level, that might be around 30. That might be some resistance. So do keep that in mind. And let's see. Yeah, maybe I will just put an alert here at, let's see, $30, above 30. That might be a level to trim at. So just something to consider there if this does continue to go higher. And that's about a 50% swing from where we're currently at. So pretty nice there. But if we are starting to see a pullback in the pre-market, if we do start to see a little bit of a retracement, where might this be going to? So just going from that low of 1471 to yesterday's high, which was at 2139. Let's just make sure those levels are right. So I need to adjust 0.2 to be 2139 there. And then 0.1 is also off by a penny. So kind of crazy there, 1471. And then let's just adjust those adjustments or those retracement levels, proportions. Don't need the 1618 there, but I would like to see, let's see, the 382, that potentially getting into dip buy territory. That is around 1884. Then the 50% retracement at 1805 being right around 18, psychological level, whole dollar number, makes some sense there. And then the 618, that matches up very nicely with the 1618 that I have marked in green there at 1729. The 618 here in white, that is at 1726. So those are all levels that I would think are going to be very nice dip buying opportunities. And I would have to say that I am going to adjust this alert here, not below 1542. I don't think that's happening, but I do think that 18 might be happening. So that might be a nice dip buy level. And then while I have it all up here, I might also throw up the moving averages. We do have the 50-day moving average in yellow up there at around 22. That effectively acted as resistance, not quite getting to it. Maybe we do see it act as resistance once the market opens today. So we'll have to see if we do get rejected up there before maybe we see a pullback to around 18. Maybe I'll want to adjust that to 19. And so maybe I will, add an alert at 19 in case my level at 18 doesn't get hit. So I will include that there. Above 1923, I think I can actually just delete that there. So I got those three alerts. And kind of corresponding with those levels, 19 to 18, we do have the 21-day moving average currently at 1857. So maybe that is a level to dip buy at 1857. You can see there in the pink. And then the 200-day moving average does look like that swooped in, acted as support. While we didn't get to fill that gap, we did get to the 200-day moving average, which over here was at a price of right around 1527, somewhere around there, 1536 it looks like on April 7th, but it's currently at 1550. I don't expect us to retest that. If we do pull back, the most I would think is going to be to around 17, maybe 1725 to correspond with that 618 and this one 618 in green from over here. So yeah, I think that this is looking really good. And I should also note that with these bigger green moves that we saw, those were days we actually saw increases in volume. So on Friday last week, on April 4th, we saw a volume of 22.8 million shares traded. But on Monday, we saw 2394. The dip was being bought. Green engulfing candle, bullish engulfing candle there. And then on Tuesday, red day, we actually saw a decrease in volume going from 23.94 million to 19.96 million. And then again, an increase in volume on the green day up to 31.46 million. So this is just looking good there. We do have let's see, lower lows in the stock price here. So that might seem bearish, but what we have is higher lows in the RSI. That is bullish divergence. We also see that the MACD has kind of been oscillating from red to green. Looked like it was going to pull back to red, be negative, suggesting a pullback. But it does look like if we take a step back, that little candle there does stand out. This looks like it's blipping back up into the green. And so I think that we could be seeing some moves, potentially getting back up to 30, but I think that would potentially be the top. And that does represent a 50% swing from current price. So looking really good there. And yeah, so we'll have to come back and check in on this in a week or so. But, you know, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. And so with that being said, I am just going to pull up the chat to see what people have to say. And then I will probably close this down. I'm just going to turn on the TV so I can watch my little program, Gareth Soloway, on the hour in about a few minutes. But just going to catch up on the chat. And so Laura Rogers is saying bull trap just to hit the historical price to earnings ratio stops can drop 20 to 40% more. I agree in the sense that I think that what we might be seeing is a rally really over the course of the next couple weeks, kind of corresponding with that pullback in the UVIX and the move up in the SVIX. So I think over the next couple weeks, we'll see a rally, but then a couple weeks after that, corresponding with another box here on the SVIX and the UVIX, I think that we could start to see you know, maybe some lower lows. So there might be some good opportunities later on. So I think it's good to not be chasing stuff, to buy at levels that make sense. And then Hydro Hustler commented VXX long. And so I personally, you know, I like the, let's see, I like the UVIX better than the VXX. And so this is, yeah, let's see. So like the VXX, so this is similar to the, yeah, the UVIX. So yeah, I think that for a swing trade, yeah, this could be a long, yeah. So the VXX, let's just think about this. So the UVIX down 43% yesterday, up 15% in the pre-market. The VXX, let's see, only down 20% yesterday, so less risk, but only up 6% in the pre-market, whereas the UVIX is up 15%. So I like the UVIX just because I think it gives a little bit more exposure. It's a little bit more aggressive. But, you know, what I go over in the UVIX or the VIX, definitely applicable to the VXX for sure. Hydro Hustler, good morning. Sorry if you're not still with me. Yeah, just trying to, you know, kind of focus in on the charts, and I'm just gonna, my TV's a little slow. I've got my old TV up here in my little studio office room, so I can watch stuff right after doing these pre-market preps. And then I do see Benjamin has the comment for FLNC, so I will follow up with that. But I mean, I imagine probably not too dissimilar from what I've been saying in the past. To get a bullish engulfing candle, so that looks good in the sense that it opened and closed above the open from Tuesday and closed above the open from Tuesday and opened below the close from Tuesday as well. Bullish engulfing candle there. But let's see. Okay, so we do have the volume increase relative to what we saw on Tuesday, so that does look good. But I mean, this did go up 13% yesterday, so I think it's kind of good to consider like relative percentages. If a stock went up less than what the SPY did, that's probably showing some relative weakness, whereas this up more, that's showing some strength, but it's still below 5, couldn't rally to above 5, so I still view this as getting rejected from right around 5, if it can even get up to that level, because at this point, downside move consolidation, not able to get back up to here with the big news that we had yesterday. So I'm feeling like this is probably going lower. So I'd look for no closes below 363, but I suspect that will be happening. So I do think that this is probably going lower, but maybe it could retest these levels, 479 or 478, that red line there, and about $5. But yeah, with all that being said, I think that I might be tuning out to tune into Gareth Soloway's show, The Game Plan. And yeah, I hope that this was helpful for you guys. And if it was, make sure you like the video, like the stream, and subscribe to the channel for more pre-market preps and videos like this. Thank you so much for watching, and I hope you guys have a great day trading.